The market's reaching for inefficiencies and liquidity, and it's doing it on a time-based delivery schedule. That's it. That's all it's doing, folks. Now, if you remind yourself continuously that that's what this is about, it will remove that tendency for you to reach and say, oh, this is too complicated, because it's not. It's not complicated. I'm just showing you everything available to you, and you have to see, okay, this time of day is what I want to trade. In this market's what I want to trade. And this setup is what I want to trade on. This framework is what I'm hunting in the marketplace. If it's not there, I do nothing. But it will exist at least once or twice a week. And that's enough. The problem is you want every single session, every single day, you want to be in every swing, you want to be able to justify why you're not in a move every single time, and you want to know you're in every move that makes money. And that's impractical. And that just shows infancy as a trader. I felt that there was a way for me to do that too. And even with everything I know, I can't be in every move. I have to sleep. I have to do things with my family. I'm just not interested in looking at the charts. And that's the reality. So you can't put that much pressure on yourself. So let's keep on going here. All right, so now we're going to get into some order flow. And this is going to be a little bit in depth, and just bear with me, because this is probably going to be one of those videos at this point you want to come back to at a later time. Come back to this one a couple times this year. Like every 3 weeks, come back to this one, and you'll see that you understand more about what I'm talking about here every time you do it. It'll seem like a brand new video each time you look at it and listen to it, because you won't be able to ferret out the information I'm showing you, because it won't mean anything to you the first time listening. For the older students, people that have been with me for a long time, this is going to be a little bit more in depth. All right, so we have the 10 o'clock to 11 o'clock silver bullet hour in the AM session. This is ES on a 1 minute chart. And you can see at the high end of that old opening range gap, we're opening and then slamming down. Remember, we fell short of the buy side liquidity I told you we were going to go for. So we went outside the range of the opening range gap. And then right here, we slam lower, trade down into an order block. Remember the order block I showed you before we went into the slide here? Let me get that one. That's this one here, okay? The blue line is that order block right there on a 5 minute chart. On a 1 minute chart, that level right in here, what we're studying is the 10 o'clock to 11 o'clock time. I'm going to give you more time to go back up to that. 10 o'clock to 11 o'clock, we're looking at this price action here. What's being shown on the 5 minute chart here, we're zooming into all this little area here on the 1 minute chart right here. Now all this, we're going to magnify it and looking at it on a 1 minute chart. So we're in that same area here. So the market drops down, we create a fair value gap in the form of a city. Sell side imbalance, buy side inefficiency. That's this move here. We create relative equal highs and relative equal lows. It trades down. Remember that shaded area here? This is the low of the old opening range gap, Tuesday to Wednesday, and Tuesday to Wednesday's opening range gap high. We're trading at the low of that old Tuesday, Wednesday opening range gap. Hitting it here, hitting it here. Look at the bodies respecting it. We just go outside of here, and then we run these relative equal lows there. The wicks are doing all the damage. Then we quickly run back up, take out a short-term high. Oh, now we have something right. This is the 2022 model that I taught on the YouTube channel. Take stops, shift in market structure, fair value gap, buy it. That's your silver bullet. Ooh. So I can blend the 2022 model and the idea of the ICT silver bullet, blend it together, and this is what you do. It isn't always going to be a continuation. You're going to treat it sometimes with a reversal, and this is what you're looking for here. You can buy it here. These arrows are just for illustrative purposes. These are not executions for disclosure's sake. I'm just showing you where your entry would be. This is how you want to do your own journaling. You want to, like in areas over here, or over here, or up in here, you want to annotate and reward yourself with positive self-talk, saying, it was amazing to see this pan out the way I was expecting it to, and you see this. And then when you look at it week end later, or the week later, or a month ago, you go back and look at your old stuff, and you'll read that, and your subconscious remembers that as pseudo experience. And the way you condition yourself with positive self-talk, never putting anything negative in your journal entries, you're conditioning yourself to see the positive aspects of these types of things in price action. And you trick your brain into seeing it like you actually did it. And by doing that, it helps fuel your motivation, and it removes the uncertainty because you're training your expectation and your understanding and your subconscious to recognize these things quicker by doing it. Versus if you just watch price action and leaned on somebody else to point things out to you, when you're back testing and you're studying and journaling, you want to really put some work into this. You really want to do, this right here is better than most technical books. I have books that I spent $400 on, and they are not this annotated. They're not that detailed. I took my 30 years experience and what I look for in price action, and I applied it to this. These types of charts or examples of fractals in price action, this is what you want to treat this like meditation. And the more you put into this, the better you're going to be as a technician. And that technician will make you the better trader than you've ever imagined. But you have to do this step, folks. You can't just skip over it. There's no way you can learn how to do this without doing the back testing and journaling and studying. It has to be done. And if you don't want to do it, then just simply expect that you're going to fail. Okay? And that's the honest truth. And there's no sugarcoating it here. I don't ever do that here. But if you're trying to do it half-assed and trying to do it and not really putting an effort into doing it right, you're not going to be successful. And you have nobody to blame but yourself. But there's two opportunities here for the silver bullet. You have this one here, where it trades down into it, and then we have this one here. And it rallies up, takes the buy side here, and then runs into the bearish order block, and it doesn't even need to trade outside of that old range on Wednesday, Thursday's opening range gap. So we have profitability and being incorrect. Remember, we're aiming for the buy side. Wait a minute, you just said we're wrong and we could be profitable? Yes. Remember the rules for silver bullet. For ES or index futures, it's got to offer at least a 10 handle range. Well, if you're buying it down here at 41.42 and you're expecting it to go up to the buy side, that's the best case scenario. But you also have these gaps in here, this shaded area one here, and you have this one here. So you have Tuesday, Wednesday, and then Wednesday, Thursday's opening range gap. The algorithm will refer back to those same levels, folks. Okay, it's not just doing it today and yesterday. It's going to do this in perpetuity. Every day in the future, it's going to remember these levels up to 3 days. Sometimes it'll refer to it beyond 3 days, but if you use 3 days as a general rule of thumb, it will serve you well. After 3 days, take it off your chart. You do not have all these on the same chart. You have to create templates, and templates are useful. So you have a template that has all of the opening range gaps. So that way you're toggling. This is what I'm talking about. When I'm telling you that I have 12 different monitors and I'm constantly referring to everything and cycling through everything, I'm looking at that the whole time I'm talking to you. When I was doing those live sessions and calling the market live, when I'm doing it with Twitter and I'm saying this is what you're looking for, this is what you're looking for there, I'm constantly getting information and intel referring to these levels while price is marching along and ticking away. I'm not reacting to price. I'm anticipating it.